Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu. Well, the markets have hit a century just to kickstart trades. So the Nifty is up, but the one that's really outperforming right now is the Nifty Bank. We made this point earlier today that if it can get past that 48,500 odd mark, it could see a bit of a breakout. And that's precisely what's happening. The Nifty Bank is the one that's running away up 500 points. Mangala.
Let's watch out for how that plans out, largely because it is also Nifty Bank and Nifty Financial Services expiry tomorrow, largely because Wednesday is a holiday. But let's talk about a bunch of individual stocks, and all of them are on our radar because of earnings. Mahindra Holidays and Resorts, the company reported a good set of numbers for the fourth quarter. The revenue rose about 12.5%. EBITDA too rose about 14%. Led by the European business, which saw a bit of a turnaround as promised by the management earlier as well. We have with us Kavinder Singh, who's the MD and CEO of the company, joining in to discuss the numbers further. Mr. Singh, it's public knowledge now for the last time that we're speaking in your capacity as Mahindra Holidays. So it's been good speaking to you through the time that you were at Mahindra Holidays, and I hope that you will continue to speak to us in your next assignment, which is your alma mater at Pidilite as well. But as of Mahindra Holidays, you've taken the company to a certain stature. For your successor, who is Mr. Manoj Bhatt, I just wanted your thoughts on what your targets for FY25 and beyond are for the new management, things that you perhaps couldn't have completed and you've set as targets for the ones who succeed you.
Yeah, this is a very, very insightful question, Mangalam. What we are aiming, and the board is behind us, and my dear colleague Manoj is obviously committed to that, is that we are looking to grow our room inventory from 5,000 to 10,000 keys. And let me build a little bit on that by 2030. We have already put in various pieces of the puzzle together as to how do we get there. Number one, we are working with various state governments, and the public-private participation is gaining significant momentum. We had started one resort in Janjeli in Mandi district with HP government. Now we have got the MTDC Harihareshwar concession agreement signed, and we are also looking to start two new projects in Orissa. Two pieces of land parcels, as we speak, have been in principle allocated, and the demarcation and a few other things are going on. And as we speak, we are working with Uttarakhand government also. They have their land allocation policy that will come out soon, and we have already identified few land parcels there as well. And we signed a memorandum of agreement or understanding with Tamil Nadu government as well. So PPP is going to be a very big area of focus for us as we move forward, because we have a fairly aggressive room inventory addition plan. The second good part is that we closed this year, or rather the quarter, at 1,383 crores of cash on our books. And this is a significant movement upwards over the years, as you have been seeing us. So we are very happy that we will be growing our business from 5,000 to 10,000 keys without almost taking no recourse to debt, because we generated significant amount of cash this year as well, operating cash. Now, these two factors at play. What do we do in terms of member additions? We hit a member additions mark of about 20,000 this year, and the quarter four also turned out to be extremely robust. So obviously the member additions will accelerate in line with the inventory additions. More cash will get generated in line with the business model, and as a result of which we will be able to invest more in acquiring or building new resorts. So at a very, very high level, this is the vision that we have, and we are committed to delivering on this vision. And this is something, as you rightly said, that this is my last call with you on Mahindra Holidays. And I can see that we are already taking off or set to take off. We have come a long way, but we are going to go much further as based on the plans that I have outlined. And these are the plans that have been approved by the board as well.
All right. Hi, Mr. Singh. And it's been a pleasure talking to you, and we wish you all the best. And we'd be happy to speak to you in your next role as well. Let's get a couple of numbers out of the way. I recall you told us the quarterly run rate of membership should hit around 5,000 odd. You've achieved that. From here on, what could the quarterly run rate look like? Point number one. Point number two, the EU business, you said it will turn around. It did. What's the outlook from here?
Let me start with the second question first. I'm extremely happy with the Holiday Club Resorts performance in quarter four. We hit almost our all-time high number of 6.8 million euro EBITDA in Q4, leading to a full year 5 million euro EBITDA for the full year. But I would just like to hasten to add that in Q4, which is a seasonal quarter, we had expected them to do well, but they have definitely surpassed our expectations. Remember, the war is still going on. Finland and Sweden are still in recession. These are the two big areas where we are present apart from Spain. But having said that, there has been a significant focus on cost reductions, significant focus on driving timeshare sales, which was up 9%. YOY basis, people are buying more timeshare rather than buying second home. Finns love buying second home, but right now the mortgage rates are high. So there are factors which are playing out. Management is extremely, let's say they have put in lots of measures to get the timeshare sales going and the renting sales going. So as a result of which, the Holiday Club Resorts turnaround, which we had promised, is clearly well on its way. And if I were to look at our member additions in Mahindra Holidays, we hit the 20,000 mark, which is a very significant achievement for us. And we are extremely happy about it. And the areas that I'm even more happier about is that we had 59% of our sales coming from the digital and referral routes, which means the pull for the brand is increasing. For the full year, this number stands at 57%. We have multiple plans in play. Our focus on corporate, because we are targeting corporate retail business in much bigger way than what we have done in the past. So we had launched few initiatives on remote sales, corporate. These initiatives are beginning to now show some signs of, let's say, momentum. And that is something that will propel the company forward into the future. The product proposition is more robust than ever. Immersive experiences for extended families, friends, and the fact that we have access to more than 100 resorts for our members, including European resorts, the number comes to about 150. So there is a very significant momentum I see. We don't normally give guidance on the member additions, but I think since you had very directly asked, will you touch 20,000? And I had mentioned to you, yes, indeed. So I'm sure my successor will come and think about what is the number that he would put it out in the market. But the momentum is good and the initiatives are in place.
Well, if, your previous answer is something to go by, Mr. Singh, you said that, member addition will grow in line with room inventory. Room inventory is close to around 5,700, 5,100 odd will go double. And then we are looking at membership doubling by 2030 as well. But we'll leave that for your successor to answer. Final question then before we let you go. You have cash on your books. Growth is coming by. European EBITDA turning around everything. Any area of improvement where you think you could have done a little better and that, leaves the room open for the next person to come in and seed that area as a growth target, apart from all these things that you've lined out?
In any business, I strongly believe that there is always work in progress. And, we are custodians of the shareholders and all stakeholders' interests. I mentioned earlier, we have come a long way, but as I said, we are about to take off to a different trajectory. Our inventory additions in the past used to be just at about 200 level. We are now at around 400 level. And I'm sure that this, is going to accelerate. To my mind, this is a high growth opportunity area, which in the past we could not do enough of. Obviously, COVID was also a bit of a dampener, but yes, we moved from 200 to 400. And the fact that we have significant cash on our books, which wasn't there many years ago, will also act as a very big, opportunity to create momentum in room additions. And yes, you rightly said that we are at 5,327. We are likely to do 10,000. And you're right, member additions have to grow in line with that. So these are the areas of opportunity which are today left to be sort of tapped, which I'm very confident will be tapped as we look into the future.
All right, final question, 3 words if you could answer. How is Manoj different from you?
I have always believed that I look at people where we see more similarities than differences. We are bound by a common code, which is Mahindra Rise. The philosophy will continue and is common. All the leaders in Mahindra Group are driven to excel, to move with significant amount of collaboration, agility, as well as boldness. So I see more similarities than differences in this case, and I'm very confident this is how it should be and this is how it is.
All right, take that point. Thank you so much for joining in and talking to us about Mahindra Holidays for one last time. Mr. Singh, thank you, and wish you good luck for your stint at Pidilite as well after this. With that...
All right, let's turn our attention then to our special segment where we get you a few ideas for profit from Money Control Pro. Madhu Chanda De of moneycontrol.com joins us to talk about a stock that she's tracking closely. Madhu, take it away.
We are talking about IndusInd Bank that recently reported its numbers, and it turned out to be a decent quarter with no surprises. The loan growth remained very strong in excess of 18% with a shift towards high-yielding retail. The margin was range-bound despite increasing borrowings in the quarter. While deposits remain a challenge for the system, for IndusInd Bank, deposits are showing early signs of catching up. Slippages were lower sequentially and asset quality improved. Fees continue to lend support and is mostly granular. Costs remained elevated as the bank continued to invest for growth. With return on assets upwards of 1.8% and reasonable confidence in improving the same, we see immense value in the stock that is trading at an undemanding valuation of 1.4 times FY26 expected book.
All right, Madhu, thank you for that. With that, we'll step into a short break. On the other side, we'll get chatting with the management of IREDA. Pradeep Kumar Das, who's the chairman and managing director, joins in to discuss not only the quarter gone by, but the fact that they've been now included in the Navratna status.
Welcome back. Well, there appears there is some bottom fishing that's taken place in BSE because the stock was down close to around 18%. Now it's down close to around 12%. So there has been a bit of a recovery from the low point of the day. Keep an eye out on that one. The other stock that I'm looking at is Chambal Fertilizers. What a big intraday recovery we have seen on that stock. It's now moved to the high point of the day. So that one should be in your radar. And Birla Soft comes out with a set of numbers as well. Mid-cap IT, well, it's been a little bit confusing with regard to the trend that's coming out. But for the time being, you have Birla Soft that's moved to the low point of the day. And another one, which is Biocon from the pharma pack, well, it was showing signs of starting to outperform after the kind of underperformance that we've seen. But that one as well has slipped to the low point of the day. Just one more stock, CSB Bank. You know, it was looking quite good because it has exposure to gold. Unfortunately, in the past quarter, the asset quality didn't look very, very good. The management has clarified that they're expecting that to turn around. But for the time being, the stock is down. So if I look at it from the highs on Friday, the stock is down close to around 8.5 to 9% odd. It was around 410 rupees odd. So just keep an eye on that stock. The management said that going ahead, they're expecting NIMs to hold at current levels, but the cost of deposits as well have moved up. So that one has done very well in the last 1 year or so. Well, it's come in for some profit taking, moving to the low point of the day.
Nigel, you know, a bunch of stocks, like you pointed out, doing well, but also apart from bottom fishing, we are seeing buying at all highs for some stocks. Bharti Airtel, case in point, has moved to the high point of trade, opened slightly flattish with a bit of a green tinge, and now it's up around 1.5%. So that's the stock which has moved to the high point of trade. But we have a big buzzing stock with us.
Well, that's right. Let's focus on Indian renewable energy lender, that's IREDA. They have been granted Navratna status by the government of India. Well, the company also saw the asset quality improve and the assets under management rise over 25% on a year-on-year basis. We have with us Mr. Pradeep Kumar Das, who is the chairman and the managing director of the company, who joins us. Hi, Mr. Das. Good morning, and it's always a pleasure to have you on our show. Well, let's get a couple of those basic numbers first out of the way. What kind of AUM growth could you guide us for? And also, what kind of margins can you work with for FY25?
Very good morning. And if you remember most of my interviews in the past, I have already spoken that we never focus on the numbers. And if you see our track record, almost 30% CAGR, 30-35% CAGR we have given. And 27% of loan book addition. Knowing if you see the India's additional capacity addition, what has happened year to year, it was not in that same pace what it was previously. In a sense, there is slightly percentage lower growth in last year. But however, if you look at our book additions, not only our book addition, any book in that matter, if you see in renewable space, such kind of CAGR growth nobody has exhibited. And this we have been talking from the beginning.
Okay.
And now we have reached Navaratna. Our ultimate target would be for Maharatna. Because earlier we were Schedule B, from Schedule B to become Schedule A, then
Yes.
Miniratna to Navaratna. So now the only target probably would have left in the Government of India space, that is Maharatna. Anyway, we have focused always on our fundamentals and best quality corporate governance. I just do that. I have been talking earlier also that our main focus would be timely reporting. And if you see this year, we are the first banking and non-banking corporate in India.
Mr. Das, that's absolutely splendid, that you're the first ones to report. And as you said, you'll have grown by 30-35% in the past. So for this year as well, FY25, a 30% growth is what we should work with. And give us some color on NIMS. 2.85%, I think it was, of last quarter. So what should it look like? Two key numbers, sir. As you said, fundamentals will drive the stock. So give us those two key numbers.
See, you are talking about 30%. I'll tell why not 50%? Why not 60%? So, see, basic is that we'll try to fully leverage our net worth. To remain healthy CRAR, we have to have 7 times of maximum, 7 times of rotating. And we have to see our CRAR at a very healthy level. So that is one concern. Apart from that, the kind of track record what we have, the kind of fundamental strength with respect to quality, best quality project appraisals mechanism in place, and post appraisal and disbursement, best quality review monitoring in place, which has enabled continuous reduction, not only simply by enhancing the loan book, the percentage reduction, but also in absolute terms, we have also recovered our past dues. So that has strengthened, and we'll keep continuing that. And like any other corporate, our aim is always to have maximum growth, but at the same time, best quality corporate governance.
All right. We understand that, best quality corporate governance matched with maximum growth that you can. In the past, you've grown at 30%, which is why my colleague asked whether this 30% is sustainable or not. So we will take that as it comes. Last quarter, you did about 27%, which you said was because the industry had slowed down. I just wanted a thought on your, mix going forward. The last time you joined us, you said 30% comes in from wind, and then you have solar, you have other hydropower, etc. as well, at around 12 to 15%. So what sector are you seeing growth in, and what will each of these sectors grow at? What will your mix look like?
If you see, the percentage of growth is almost similar in the composition. There is not much change, hardly 1 or 2% here and there. But in the emerging space, particularly bioenergy, ethanol and all, and also manufacturing of PV cells, modules and all, our percentage has gone up slightly more. And in the time to come, we envisage further growth in this emerging sector, particularly e-mobility, manufacturing, and again, green hydrogen and its derivatives, the related area, which is also emerging. And see, our strength was in making the sector bankable. If you look at ethanol, 1.5 years back, we started lending, and it was initially in the entire sector, be it banking or non-banking space, everybody was going slow. Once we started giving a push, then other banks and they have also started giving it, and the sector is getting momentum now. And
so this emerging that you spoke about, how much is that as a percentage of your book right now, and how much do you envisage it to be going forward?
So almost around 20% to 20 to 25% is there.
Okay, and you expect how much will this become going forward?
And our target would be always to keep a mix of 55-45 or 50-50 maximum, because we need to ensure a healthy asset quality also. Because in the emerging, you have the risk matrices more. So as a result, you have to load risk premium. The moment you load risk premium, many of the projects may not become bankable. So we have to see the balance approach. And almost 65 to 70% of our assets are risk-free assets. That means plain vanilla area assets. A fair amount of the de-risking has already been done in the sector. and we need to keep a balance in that. And see, we are continuously reducing our net NPA as well as gross NPA. And in fact, my team's dream, the time should come that sometime we should reach to a net NPA of 0.
Okay. That'll be interesting then. Mr. Das, we're running a little short on time, and you've given us the direction, the direction that you see the company moving in, which is quite encouraging. But leave us with a few numbers then. Your NIMs, I asked you earlier about that. It's been hovering around 3%. So what is the outlook? And you're saying your asset quality ultimately will improve, that the net NPAs will come down to 0. But in the near term, what does it stabilize at? So NIMs, gross NPAs, net NPAs. Let's wind this down with these three numbers.
See, last 4 years back, our net NPA was 7.18. And if we could reach to 0.99, what figure I should predict? It is just question of time. So when we have reached 0.99, that too, taking the risk of emerging sector, 20-25% if we are going for emerging sector, where risk is too much. Despite that, we have contained the net NPA at 0.99. So after reaching 0.99, when I am saying our dream, our team's dreams that would have a net NPA 0, that speaks everything. And let us not talk about any specific number. Let's see if our last 4 years track record, this, I think nobody has envisaged this kind of number also. Even during IPO, when during the roadshow, when we spoke about it, probably people could not connect with that well. And that's the reason how the share market price in the market went up. And I'm sure what kind of trust and confidence we have exhibited, if we can sustain that, these numbers, what you are expecting me, that will be always healthy.
Incredible. So, just for our viewers' sake, if you could explain to us what does the difference between Mini Ratna, Navratna and Maharatna is fundamentally when it comes to your business? How does it change things for you?
The only one word is that is autonomy. Now we'll have autonomy in a sense. Our board will be fully empowered to have subsidiaries, joint ventures, overseas branches, for which otherwise we have to ask, take the consent and concurrence of our administrative ministry. Of course, in the past, our ministry as well as Nitya has been too kind, also Deepam, to give us the consent, and as a result, we have taken the initiative for opening of office in GIFT City. But having Navratna status means a lot of autonomy. Also, like manpower restructuring up to certain level, our board is empowered to decide what number of manpower and how the division should be, and setting up branches, be it domestic and overseas, all these. Basically, it is autonomy, and we are living in a corporate governance era when, despite being a public sector, and that too just getting recently listed, and we have exhibited the best quality corporate governance and fastest reporting standards in the banking space. That speaks our competence and capability.
Okay, all right. Thanks a lot, Mr. Das. You've given us some color on the results. We wish you well, and hopefully during the course of the year, we get you yet again. And at that time, we eke out some more numbers. For the time being, congratulations on the past year and wish you well for this year. Well, it's a little bit of a short break. Come back, continue your focus on markets and stock-specific action. Well, the markets are trading with solid gains. The problem is the broader markets. Just one index is trading in the red for you, and that's the mid-cap index. So some profit taking is what we're seeing in the broader markets. But it's a good-looking screen, mind you, with the banking names outperforming. We'll wrap up on Chartbusters. Trading hour comes up next.